We have a few that are still joining us, but we're going to go ahead and begin today's webinar. First, hello. Thank you all for joining us today for the second of a three-part webinar series presented by the International Housewares Association, the NPD Group, and Homeworld Business. I'm Mark Adkison from the International Housewares Association. I'll be your host for the next hour and also one of the speakers for today. I've worked at IHA for almost 3 years. I've held, prior to that, I held executive roles for approximately 15 years on the brand side of home and housewares industry. All of those as a member of IHA, an exhibitor at our industry trade show, which was the International Home and Housewares Show, now known as the Inspired Home Show. First, I want to mention a few housekeeping items. We have reserved time at the end of this session for Q&A. Please enter any questions that you have through the Q&A portal that you'll see a button on the Zoom window. Don't enter them if you can resist entering them into the chat window. Please use the Q&A portal. Liana will join us soon after we finish the presentation to monitor and to moderate that session. As we go through the presentation, hopefully you'll stay with us towards the end as some of the most important details are covered in the last part of the webinar. And finally, as you will see during the presentation, there's a significant amount of content on most of the slides. Our plan is to make the presentation itself and a recording of this webinar available via our website, www.housewares.org, soon after the end of the session. I'm joined today by Craig Brightup. He is the Chief Executive Officer of the Brightup Group, LLC. He's also been a very valuable partner of the IHA on all governmental affairs, and will be providing some critical insights on the latest legislative actions taking place in Washington, D.C. Brightup Group is a government relations consulting firm in Washington, D.C. He's worked with over 20 different organizations since 2009, including the U.S. Chamber of Commerce, and is also a founding member of E Street Partners, a bipartisan consortium providing public policy services to corporations, trade associations, and coalitions. Previously, he was Vice President of Government Relations at the National Roofing Contractors Association in its Capitol Hill office, which he opened in 1990. Before that, he headed congressional relations for the Federal Trade Commission by appointment of President Ronald Reagan. And in 2000 was named to Fortune Small Business Magazine's Power 30 list of influential insiders in our nation's capital. So certainly we welcome Craig. He's going to join us to say hello for just a minute. Craig.
Thanks, Mark. I'm really looking forward to it.
Thank you, sir. So Craig will join us mainly towards the end. He's going to cover all of the key parts of the last piece of legislation that was covered, which is probably some of the most important information you'll get today out of the presentation. Looking at today's agenda, today's webinar, you can tell we're going to be focused on three key pieces of recent aid legislation passed by the U.S. Congress and also signed into the law. It's intended to help individuals, businesses, and other important entities manage and survive the coronavirus pandemic. We've all been impacted. We all know what has happened so far. What we don't know is what's going to happen from here forward. The legislation that's been passed so far is just designed to help us bridge through this really tough time. As we discuss each piece of legislation, you're going to hear them referred to in a number of ways, but we try to keep it short and refer to them by, as you see on this list, COVID-1, COVID-2, COVID-3. We're going to talk about the legislation in chronological order that they were signed into law to kind of help keep this flowing. And again, as we mentioned, we'll have a Q&A session at the end. Feel free to put those questions in to Liana, and she'll bring them to us here pretty soon. We're going to start looking at COVID-1, or the Coronavirus Preparedness Response Supplemental Appropriations Act. Now you can see why we refer to it by an abbreviated name. It would take us a long time to do that if we did not. Our coverage of this bill is really going to be short and sweet because we're going to focus mainly on COVID-2 and COVID-3 that have the most dramatic impact to each of your businesses. COVID-1, briefly talk about that. The bill provides $8.3 billion in emergency funding for these federal agencies. Essentially, this was a funding bill, a supplemental funding bill to make sure that many key agencies within our government had the additional funds to be able to handle the increased workload that was going to come as a result of this pandemic. Those supplemental appropriations were sent to the Food and Drug Administration, to CDC, National Institutes of Health, and probably importantly to many on this call, to the Small Business Administration. We all know that there's going to be a significant increase in applications for the different loan packages that have been put out. And this bill, COVID-1, was to make sure that they had the resources to be able to do that. The reason we won't focus on this is because really there's no actions required for businesses under this law. This was just making sure everybody was prepared as they move forward. Which is why we'll move on to COVID-2, which is where we really have the first major impacts and requirements for many of your businesses fell first under this Families First Coronavirus Response Act, the FFCRA, again, COVID-2. This bill responds to the coronavirus outbreak by providing a number of guidelines for businesses to follow that's going to help make sure that employees that are impacted by this pandemic have the benefits and the availability to be able to care for themselves, care for others that they are required to care for, and also to ensure protections for healthcare workers. You'll notice this became law on March 18th. Very importantly, the effective date of this law is April 1st, and if you all look at your calendars, you'll see that that is today. Key components of this bill, we won't get into all of the details in this bill, but you could see there on the screen, we will focus on unemployment compensation. We'll talk extensively about the paid sick leave and what impacts that's going to have on your business. We'll talk about the Paid Family and Medical Leave Act. Essentially, there were additions made to FMLA related to coronavirus. We'll talk about the provisions for diagnostic testing and health services. We'll get less into the school nutrition programs and some of those types of components of the bill. Essentially, there were funding increases for most of those to make sure that those that are hungry or fall themselves into need have the ability to be able to provide for themselves. Lastly, there on the list, the discussion of liquidity impact for small businesses. There was consideration given throughout this bill that as requirements are laid upon employers, what does that do to small businesses that potentially may not be an ongoing concern if more costs are piled on top of them? And we'll discuss that towards the end, what type of exemptions were put into the bill for that. COVID-2, we'll talk initially about the unemployment compensation. Essentially, the bill gives the governments a little bit of flexibility in how they qualify people for being able to participate in the compensation program. Federally, it was required that the states determine if they're able, available, and actively looking. Essentially, this eliminates some portions or restates some portion of that test, allowing them to, number one, forego what is typically a 1-week requirement of waiting before filing. The government allowed them to be able to forego that. It also provided some funding, an additional $1 billion for state unemployment programs. To do that, they needed to do that so that they would be able to authorize these extended unemployment benefits beyond the usual 26 weeks that are out there. It does apply to states that experience a spike in unemployment. When this bill was written, a lot of things have changed since then. There's probably going to be very few states, if any, that actually will not experience a spike in unemployment and be subject to the provisions of this part of the bill. The extended benefits, so beyond that usual 26 weeks, are fully funded by the federal government. One of the most important parts of this is, and will impact most businesses, is the paid sick leave. It requires private sector employers with fewer than 500 employees and also government employers to be able to provide 2 weeks of paid sick leave. We'll talk about it a little bit later, but the components that I'm going to discuss right now actually are on top of any current sick leave components of your benefits program. This is on top of. Eligibility, any employee without regard of duration. So if they started 1 week ago, they're actually eligible for this program if they meet one of the 6 definitions that are listed below here. I won't go through and read each of those, but you can see some of those on the screen. And there's a blank in between number 3 and number 4. Pay attention to that. The top 3 reasons are handled differently when it comes to the rate of pay versus the bottom 3, and we'll go into that more in the next screen. So looking specifically at the paid sick leave, here I've grouped the top 3 and the bottom 3 reasons. This affects the amount of pay that is, or the amount of compensation for the employees that take it. If they take it based on one of the top 3, you can see you have to do a calculation based on their higher regular rate, the minimum wage, local minimum wage, but there is a maximum on there, and it's that $511 per day and $5,110 in the aggregate total. Importantly, that total will correlate to the amount of the reimbursement from the U.S. government to the businesses impacted there, and we'll get into that again in more detail. The second group, as you can see, if they take it for one of the other reasons, caring for an individual, caring for children because schools are closed or no caregiver is available, they're actually compensated at a lower rate than what they would otherwise receive, at 2/3 of the rate that they would otherwise receive. Again, limit put in place not to exceed $200 per day and $2,000 total in the aggregate. We also talked a little bit about some of the exemptions. Small businesses with fewer than 50 people from the requirement, if they offer leave for childcare when the school is closed, or the imposition of paid sick leave would jeopardize the ongoing viability of the business. That has to be approved, but certainly it is out there for someone that can show that by offering this additional sick leave, their business would actually be in jeopardy. Healthcare providers, certainly all healthcare staff and those in that field are our heroes right now, and they're the ones that are needed on the front lines. So this particular part of the bill is not applicable to those in the healthcare field. Paid sick leave in addition to whatever sick leave is already offered by the employer. So again, if you're already offering 7 days, that is first, and then this takes advantage of this is on top of that additional or the current offering that you have for your benefits. Funding, probably most important for any private sector employers that are subject to this. It is a fully refundable tax credit equal to 100% of the qualified sick leave wages. And we'll talk about what the qualified sick leave wages are. That is given to you as a tax credit. Again, it's a fully refundable tax credit, and it's applied against the employer's Social Security taxes, reimbursed if the cost exceeds what you're going to owe on Social Security. It actually is reimbursed to the employer. And again, also the tax credits, if there's employer health care plan that's allocable to the qualified sick leave, that tax credit is increased to cover that amount also. So whatever is allocated and cost that is attributable to that sick leave increases the value of that tax credit. Family Medical Leave Act was expanded to deal with the COVID-19 pandemic. Requires private sector employers with fewer than 500 employees and government employers provide up to 12 weeks of family paid leave. And essentially, this is available to any employee who's been at least 30 days, and they're out in order to care for children, and they're unable to get someone else to help care for their child due to the public health emergency. You have a 10-day period that this comes in, and after that 10-day period, the employee could take unpaid or paid leave during that period, the 10 days, and then they're compensated at 2/3 of their regular rate. Again, this has the same limit, which is $200 per day. And in this one, because of the longer time period, you're looking at a $10,000 limit in the aggregate. There's similar exemptions to this, as was in the paid sick leave program, to protect those small businesses and also to limit access for healthcare providers that are needed on the front lines. And also, once again, the funding of this is via 100% fully refundable tax credit to cover the cost of the leave and the healthcare expenses. A few additional provisions that are part of COVID-2, provisions for diagnostic testing. Essentially, private health plans have to provide coverage at no cost to the consumer. Now, I know that the administration and the government agencies are working out who gets tested. We won't address that here today, but certainly it is part of the bill that those have to be covered at no cost to those that are going to get them. There's some other parts of those provisions that have to do with Medicare and some expanded funding for that. But today, for your businesses, this is the most important piece, is the coverage at no cost. Health services, again, there's increased Medicaid funding, increased funding for the school nutrition programs. And we talked about that at the beginning, that this is just making sure that those programs are beefed up enough to be able to handle the increased need that's going to come as a result of this. Those manufacturers that are stepping up to do personal respiratory protective devices, we've actually had a number in the home and housewares industry that have changed some of their manufacturing to begin producing some of these devices. There is a piece of the bill that actually has reduced liability for that. So certainly if you've started doing that, look into this HR 6201 and look at how those liability concerns are mitigated as part of this bill. The employee notice of rights must be posted, and there's some specific guidance that just came out from the U.S. Department of Labor that talks about how to do this. Obviously, most people are working from home, so it doesn't make much sense to go and post it at an office that no one is attending. So what they have said is that each covered employer must post it, but they are allowing a period during this first 30 days that you may satisfy it by emailing or direct mailing this notice to employees. And then also you could post it to an internal or external website. There also is some discussion, and I believe it's actually written in part of the bill, that the first 30 days of this is going to be more focused on education and less on enforcement. So if this, you're looking at today as the first, this bill is actually in force. If I don't have it posted yet, can I be in trouble if someone complains? The Labor Department has said that they're going to really focus on just trying to get everyone up to speed on what's required and not doing any enforcement action of the posting of the notice. Probably most important parts of the legislations passed over the last month and a half is the COVID-3 legislation, and that's on the Coronavirus Aid, Relief, Economic Security Act, or the CARES Act, COVID-3. Craig's going to step in and go over this. This is going to cover most of the important parts, especially the SBA loans and some of the things that most of our questions to our association have come from is based around the pieces of this particular act. Craig?
Thank you, Mark. And it's a pleasure to be with everyone today. Things are moving at an incredibly fast pace by any standard, and certainly by Washington, D.C. standard. We have had three major pieces of legislation. The first two, Mark did a fantastic job explaining, and then this third massive, huge bill, the Coronavirus Aid, Relief and Economic Security Act, or CARES Act, which passed Congress on Saturday the 27th, and within minutes was signed into law by the president. Just to get started here, it's a $2 trillion and then some bill that is really, I know the term stimulus is used. Recovery is probably a better description, and frankly, and this is my own language, this is the biggest economic bridge loan in the history of mankind. $2 trillion and change, designed to help businesses maintain some kind of cash flow and keep the lights on, and most importantly, keep their employees employed until June 30th in terms of the time horizon, in hopes that we can be on better footing by then. Some of the other dates extend all the way to December 31. The key components of the bill that we're going to be talking about today is the Paycheck Protection Program, which provides for these paycheck or payroll loans, payroll protection loans. You also have economic injury disaster loans, and then SBA Express loans. So the first of those bullet points are loans that are going to be emanating from the Small Business Administration. The other two we will get to in a minute. On this slide, looking at the buckets of spending, the big corporations, 500 employees up to 10,000 employees, that funding mechanism hasn't even been put into place yet. For small businesses, of the $377 billion, 349 are for small business loans, and an announcement was just made yesterday that the loan program, the payroll protection program, will be up and running by April 3rd. That is Friday, so that businesses can begin participating and lenders and banks can begin giving these loans, and they will be approved on the same day. I'll come back and repeat that later. And then we have one of the buckets here is state and local governments. I know we had a question on unemployment insurance, unemployment programs. Mark, I'm just going to explain very quickly to respond to one of the questions that came in before this. It would extend rides on the changes that were made that Mark described in the Families First bill, HR 6201, would extend unemployment insurance by another 13 weeks to 39 weeks, basically including this is a 4-month enhancement of benefits available to those not eligible for regular unemployment insurance. An individual must provide certification that he or she is able and available to work, but is unemployed or underemployed due to coronavirus diagnosis and other coronavirus-related demands, as explained in COVID-2. The question also had to do, and by the way, the federal government is pumping money into the states to run this, but remember, the states run the unemployment insurance programs. So you are advised to go to that agency within the state to see how they are modifying or rolling out this within the parameters of their state program. The federal government is picking up 100% of the additional cost here, and upon agreement between the state, with the state and the feds, there's an additional $600 per worker per week in unemployment compensation that will be made available, and this sunsets as of July 31st. The additional payments sunset. Work sharing programs, states that have an existing short-term compensation program can get 100% federal reimbursement. That was one of the other questions that came in. And that employers participating in short-term compensation program will pay half the cost to the state. States without a law can enter into an agreement with the Department of Labor to begin providing short-term compensation payments. Again, go to your state unemployment insurance administrative office to find out more details on that. Mark, next slide, please. The Paycheck Protection Program. And let me just say, by the way, if I didn't adequately address that question, we can certainly go back and return to it in the Q&A section. But let's get to the meat of the presentation, and that is the various loan vehicles administered by the SBA and the Department of Treasury with the help of Treasury to try and help you if you need it. And I know there are questions out there about which loan might be best for me. I got to say that the Paycheck Protection loans, the PPP loans, are the ones that offer the most forgiveness. And you see in this slide, if an employer maintains their payroll or a portion or all of the loans can be forgiven within a certain period of time. Provides forgiveness of up to 8 weeks of payroll based on employee retention and salary levels. There's no SBA fees. At least 6 months of deferral with maximum deferral up to 1 year. Small businesses and other eligible entities may apply if they were harmed by COVID-19 between February 15th and June 30th. By the way, if there are part-time employees, that window is a little bit different, but people that use part-time employees are also eligible. And these loans are available through June 30th. Now, yeah, thanks, Mark. Loans available to businesses and entities in operation on February 15th, 2020. One of the questions that came in was, well, if I've had to lay off some of my employees already or cut back on their hours, is that going to make a difference in terms of the formula by which I can get the maximum loan available? This goes back to that duration in 2019. As you see under the loan size depends on business situation. Maximum loan is $10 million. If you were in business from February 15th, 2019 to June 30th, 2019, the maximum loan is equal to 250% of your average monthly payroll cost during that period. Again, I mentioned if you have seasonal workers, you can use March 1, 2019. If you're not in business, then there is a different time span for that, Jan 1 through February 29, 2020. Let me just mention that any business concern, and that's the legislative text here, any business concern that has fewer than 500 employees is eligible for these loans. There was a little bit of confusion because the Small Business Administration has its own set of small business size standards for things like loans in normal times, federal contracting, and on and on. But everyone, I believe, on this call who is in the housewares industry, and I assume also retail industry, your small business standard is based on number of employees. I've looked at that, and you should know that even if you go up to a higher level, you can go up to beyond 500. It's an either-or situation, and my guess is everyone on this call, or by and large, the vast majority, are eligible for these loans. One final point on this slide: if you took out an economic injury disaster loan between February 15th and June 30th of this year, and by the way, we're going to talk about that as the second vehicle, and you want to refinance that loan into a PPP loan, you would add the outstanding loan amount to the payroll sum. So that would be added into the formula. Costs that are eligible for payroll are compensation, payment for vacation, parental, family, medical, or sick leave. You can see all of these bullet points going down here, and this is obviously going to be made available to you as a reference. And then costs that are not eligible for payroll, that's probably almost the more important list. Employer owner compensation over 100 grand. Okay. So once you hit 100 grand, anything over than that, you can't factor that into your payroll costs. Taxes imposed or withheld under certain chapters of the IRS code. Compensation of employees whose principal place of business is outside the United States. And I think for some of you, that's probably important. And qualified sick and family leave for which a credit is allowed under certain sections of the bill, COVID-2 that Mark described. Allowable uses of the PPP loans, payroll costs, of course, as noted above, costs related to the continuation of group health care benefits, etc., employee salaries, commissions, similar compensations, payments on interest on mortgage obligation, on the principal or a mortgage obligation, rent, utilities, interest on any other debt obligations that were incurred before the covered period, which I think is kind of generous. All the things that you typically would roll into the general rubric of overhead. And then loan terms. The maximum term is 10 years. The maximum interest rate is 4%. There are 0 loan fees, 0 prepayment fee. This is when, and after the loan is forgiven, whatever is left, the continuation of the loan. Forgiveness details is equal to the sum of the following payroll costs incurred during the covered 8-week period compared to the previous year or time period. Again, that's why they're using that previous year time period as the marker, as the baseline, proportionate to maintaining employees and wages, and again, excluding compensation over 100 grand. Payroll costs plus any allowable payments made as described in the above section. Borrower must apply through the lender for forgiveness on the loan by providing documentation to verify qualification and eligible expenses. All current SBA 7A lenders are eligible lenders for the payment protection loans. And by the way, these are all lending institutions, lending outfits that have been blessed by the SBA as lenders to make these loans. And they're also looking for more non-conventional tools. You may have heard of a company called Cabbage and others that don't make loans to individuals, they make loans to businesses, et cetera. Mnuchin and Josita Carranza, who's the administrator of the SBA, are looking for any vehicle possible to pump this money out as fast as possible. So last bullet, additional lenders may be authorized by the Department of Treasury. That is for sure. Next slide, thank you. Emergency loans. Now we're getting into the economic injury and disaster loan portion of this presentation. EIDL, EIDL, I guess that's how you would pronounce the acronym. These loans of up to $2 million under the SBA's EIDL program are available under new terms because of COVID-19. By the way, this relates back to the groundwork that was laid in the first bill that Mark talked about, which originally provided some of the groundwork for these I'll just call them disaster loans. You may apply for both a PPL and an EIDL loan, but the money can't be used for duplicative purposes. So, if there are other issues that you're faced and you want to apply for an EIDL loan and can apply that loan money to that, well, then you can have them both concurrently. EIDL advances may reduce the amount of the PPL that is forgiven. So this ties into certain forgiveness issues of the PPL loan. EIDLs are now available to small businesses, business concerns with over 500 or fewer employees, and individuals that operate a sole proprietorship or independent contractors or self-employed. Just want to make sure that all of those categories are generally eligible for all of these loans that I've been talking about. Applicants must submit an application from January 31 through December of 2020 and be in business as of January 31, 2020. Okay. Small business owners in all U.S. States and territories are eligible to apply for an EIDL. No requirement to show that you are unable to get credit elsewhere. So that's a pretty nice deal. Loans up to $200,000, applicants will not be required to provide personal guarantee. The current maximum loan amount for EIDLs is $2 million. The interest rate cannot exceed 4%, but from what I'm seeing right now, the going rate is 3.75%. And the applicant may request and receive in advance up to $10,000. This is really an interesting deal here. Up to $10,000 prior to the determination of whether the applicant is eligible for the full EIDL, anywhere from 350 all the way up to $2 million or whatever amount, no more than $2 million. And it may be used to provide paid sick leave for employees. This is a bridge loan within a bridge loan. Paid sick leave to employees who are unable to work due to COVID-19 to maintain the payroll, retain employees. It does not have to be repaid even if the EIDL application is subsequently denied. The request for an advance is expected to be processed within 3 days. This is about as close to free money as I can see, where the 10 grand is just forgiven if you don't get the loan. If you do get the loan, and then it can be used for any ordinary necessary operating expenses based on any actual economic injury and financial needs. Again, can't be used for the same purposes as the PPP program loans if you're running both concurrently. And it can't be used for all of the reasons there. The bullet points, I think, pretty much lay out that it cannot be used. With the last bullet point, going back to expand facilities or acquisition of fixed assets. And I have one more comment to make about the EIDL loans before we move on quickly. There is, what's the big difference between the EIDL loan and the Paycheck Protection Program loans, the PPL loans? There is no forgiveness for EIDL loans. There is no forgiveness that I've been able to find, and I have seen no other information and analyses. There's no forgiveness for these EIDL loans, aside from that $10,000 upfront that you could get. Even if you don't get the full EIDL loan, you don't qualify. And I want to add one thing here. Do not confuse the announcement from the Small Business Administration that Administrator Jovita Carranza made on March 23rd. She announced that to help borrowers still paying back existing SBA loans from previous disasters, their payments would be deferred through December 31, 2020. Their deferments will be automatic. That's for people who had existing loans before this entire coronavirus pandemic took place. So they are not to be confused with the EIDL loans that I'm talking about right here. Thanks. Next slide. Okay. There's also a vehicle called Express Loans. The CARES Act beefs them up a little bit. I'm just going to tell you from everything that I've read, I think that these are kind of the loans of last resort. It increases the maximum amount of an express loan from 350 grand up to $1 million through the end of this year. And then they've put in this new creation, express disaster bridge loan, to allow small businesses who currently have a business relationship with an SBA Express lender to access up to 25 grand with less paperwork, to provide support to small businesses to help them with the temporary loss of revenue. It can be a term loan or used as a bridge to bridge the gap while applying for an SBA economic injury disaster loan. And then just to end this, for all of this information, and I went to the website yesterday, and I know that folks are being told by way of press releases from the SBA that you can find out all this loan information at sba.gov/coronavirus. That's sba.gov/coronavirus. Having said that, everything in DC now is all coronavirus related 24/7, meaning that if you simply go to sba.gov, better than half of the landing page is going to be devoted to the link that will take you to that page. And that will spell out what you can do and give you all kinds of info in terms of maybe how to begin filling out your applications before you even go to the lending institution. Next slide, please. Okay. Sorry about that. Yeah, COVID-3 tax relief provisions. First, let me say these are provisions that are in the legislation itself. Just very briefly, you have seen where administratively the Treasury Department has delayed tax filing and tax payment dates for individuals and businesses for any outstanding payments from 2019 until July 15th. And they've also put in a delay for those of us who pay quarterly, which I do. You don't have to pay the first quarter of 2020 until July 15th as well. That was done administratively. Also, Mark mentioned the tax credits, the 100% tax credits for small and mid-sized businesses, the fully refundable tax credits for the additional costs for the mandated leave requirements in 6201. I would strongly encourage you to go to irs.gov and then look at the coronavirus tax relief link for information on that, as well as just continuing developments. Every day there's something new on these websites. In the bill itself, you have a delay of the payment of employer-side payroll taxes. Employer-side payroll taxes. This is your half as an employer of the Social Security taxes. Medicare taxes are still going to have to be paid, but your 6.2% that you have to kick in and match what the employee is having taken out of their paycheck for payroll taxes, you do not have to pay that. And then 50% of it would be owed on December 31, 2021, and the other half December 31, 2022. Okay, however, please note that employers that do receive loan forgiveness under the Paycheck Protection Program are not eligible to defer the Social Security payroll taxes. So if you think you're going to end up using a paycheck protection loan and then seek the forgiveness to write off close to 100% of it or darn near that, then this is not an option for you. 5-year carryback for net operating losses. This is really something more applicable to C corporations, but it makes it a lot easier to apply losses going back 5 years for 2018 earnings in 2018, 2019, and 2020, and carry that back any losses 5 years. Technical loosening of business interest deduction from 30% to 50% for EBITDA, earnings before interest, taxes, depreciation, and amortization. I'm just going to leave that lie there, and you and your accountants can get together to figure out if that's going to provide a benefit for you. The technical correction to the qualified improvement property depreciation treatment for retail establishments and restaurants, retail establishments. Retail establishments really got a bad deal in the Tax Cuts and Jobs Act when the 15-year depreciation that they enjoyed for leasehold improvements on retail establishments and other kind of improvements was kicked back to 39 years. This was a technical correction that allows all kinds of improvements to be made to retail establishments, and they can go back and retroactively claim the cost or the depreciation, recover the tax payments that they otherwise would not have made, I believe back to 2018. This is a $15 billion provision in this bill alone. And since household products are connected at the hip with retail, this is a good thing to further help out the retail world. The employee retention credit, this really applies more to companies that only have 100 or fewer employees. It gets kind of complicated, but it allows a certain portion of tax payments to partially suspend certain tax payments based on the employees that are retained. It's only for eligible employers with 100 or fewer full-time employees. The credit applies to all employee wages. In contrast, eligible employees with greater than 100 full-time employees may only take into account qualified wages paid when they are not providing services due to government order related to COVID-19. The amount of qualified wages with respect to any employee for all calendar quarters in 2020 cannot exceed $10,000. There's a total cap basically of $10,000 on the credit per employee for the 2020 tax year. And again, employers are not eligible for this credit if the employer receives any small business paycheck protection loan. And then finally, we have a couple of tax changes that should make life a little easier as we go through this in terms of waiving the early withdrawal penalty on retirement account distributions for virus-related economic challenges. By the way, you have 3 years to pay that back, I believe, with no penalty. And then health savings account, there's been some changes made to allow, I believe, purchases of over-the-counter drugs and treatments that may be coronavirus related. And so hopefully I've answered many of the questions that you may have, but I'm sure there are many more questions coming, and I appreciate the ability to go over this bill and look forward to questions that are out there. Thank you.
Thanks so much, Craig. Hi, everybody. This is Liana Salama. I am also with the International Housewares Association. I have been monitoring the questions as they've come in, and I've tried to go ahead and bucket them. So let's see if we can start here with a lot of questions related to the loans themselves, Craig. So a question related to salary. At the $100,000 level, salary level, are employers able to apply for the amount of that salary up to $100,000 and simply nothing over it, or do they have to disqualify that salary altogether?
The answer is the first premise that you just explained, up to 100,000, nothing over.
Okay. Does the payroll protection loan, can that be applied to 401k contributions?
Boy, that's a great question. Let's take a look at those items here that are eligible for payroll compensation, a payment allowance for dismissal, payment of required group health care benefits, including insurance premiums, payment of any retirement benefit. The government wants these loans to get out, and they want to spread them as wide and make them as usable as possible. The answer from my read of our slide, as well as information I've gotten, is yes.
Okay, great. Related to insurance, does the coverage include only the employer's portion of the insurance premiums, or 100% of both the employer and employee share?
Boy, we've got some great questions out there. That's one that I would have to take a look at. My guess is it just covers the employer's portion or contribution. You'll note, by way of example, the payroll taxes holiday at the tail end that I talked about that certain businesses can take advantage of. That's only for the employer contribution to the Social Security taxes, and I think that's probably consistent throughout.
Okay. Great. Moving into some questions related to, got a lot of questions about 1099 independent contractor employees. Should they be handling their own finances, or should they be included in the contracted employers' estimates?
Well, as someone who's a consultant and is an independent contractor myself, everything that I've read from just a personal interest standpoint of this is that they qualify for virtually all of these loans. Certainly the payroll protection or paycheck protection program loans, it's clear that they do. Now, the availability to that group of people is going to come a little bit after April 3rd. But let me just read language that came out of the SBA. Let's see here. We are looking at these loans being available, excuse me for taking a second here. Starting April 3rd, 2020, small businesses and sole proprietorships can apply for and receive loans. These are paycheck protection loans. Starting April 10th, 2020, independent contractors and self-employed will also then be able to go and apply for these loans. Applications can be made again through any existing SBA lender or through any federally insured depository institution or federally insured credit union. And just to finish off, for the individual or individuals that ask that question, again, I'd go to the SBA, that link on the SBA's website for any additional information they have on that.
Okay, great. Next up, related to, it sounds like there are a couple different resources that are saying that the Department of Treasury has posted that the fixed income or interest rate is 0.5%, and then we had a slide that had 4% on there. Can you explain what does the 0.5% apply to versus the 4% on these?
That's a great question, and I believe the 0.5% applies to the first portion of the loan. And again, I apologize for this in terms of the sequencing of it, but all loans under this program, and this is from the SBA, all loans under this program have the following identical features: interest rate of 0.5%, maturity of 2 years, first payment deferred for 6 months, 100% guaranteed by SBA, no collateral. I'll tell you what, I'm going to do a little bit of a mea culpa. There may have been a little confusion there on the 4% with the idle loan level. Go with the 0.5%. That's what's coming out from the SBA. And if we find out anything later on, we'll follow up with it.
Yeah, Craig, just to add to that, I believe, when they wrote the law just required it to be a maximum of 4, but I believe the information we received yesterday was going to be what's applied to that particular loan. So I think the 0.5% is actually correct, but we'll work to verify that.
Thanks, Mark.
Then we've got several questions related to applying for these loans. Specifically, do you know of any resources that would include a list of participating lenders, or should folks go directly to their bank or to the Small Business Administration? What's the best place to get started?
I am told it's as easy as Googling SBA lenders or SBA qualified lenders to find those in your area. And I know that Mnuchin is working with the SBA, Jovita Carranza at the SBA, to get as many institutions as possible qualified to do this. Again, they're all over the place. I'm sorry to be so nebulous about this, but the fact is, for the person that just asked this, you can go to the SBA website. That is something that you can undoubtedly take a look at. But I was listening the other day to this continuous stream of news programs. They had a CPA on talking about these loans. He was asked about it, and his advice was just Google SBA lender and find the one that's closest to you.
It sounds like there's at least one company that's popped up offering to help folks navigate the SBA loan process at a fee of something in the area of $500. Is it your understanding that you can go direct to the SBA? You don't have to go through these third-party providers?
Yes.
Yeah.
Thanks for asking that question. My impression is this can be done directly, and they're going to make it as easy as possible. And again, the SBA press release guarantees that your loan will be approved the day you go in to ask for it. That's how fast they want to turn this around. And frankly, yeah, there's going to be a little bit of paperwork involved in it, but there's a little paperwork involved in applying for any loan. So again, they're going to try and streamline this, and everybody that's on this call should be able to go to a lender themselves and get this taken care of.
Okay. A couple follow-ups specifically on the EIDL loan and the bridge loan for a bridge loan, that $10,000 advance. Two questions. One, are there separate applications for the initial $10,000 versus the larger loan? And two, if you do apply for an EIDL loan and you are approved for it, can you decline the larger loan but maintain the $10,000 advance?
Boy, I'll tell you what, people have got their thinking caps on out there. That's a good one. I wondered about that too. And as someone who has not had the benefit of actually looking at the application form, I'm wondering if that issue is not addressed on the application form. In other words, first of all, there's presumably a separate section to get that, what is essentially an advance, which then if you don't get the full loan, you get to keep the advance, and you just get to keep it and it's forgiven. But I'm engaging in some speculation and conjecture here. The guess is, however, that there may be a clause in there that suggests that if you do get the full loan, that if you then decline to take it, that may have an impact on the forgiveness of the $10,000. That's just speculation, but the guess is that's something that the SBA may have thought of.
Okay. Okay, moving into a question around loan forgiveness for the PPP. So the idea is to have folks on the payroll through June 30th. Any indication of how long after that they have to remain on the payroll in order for loans to be forgiven?
Well, at this point in time, I think the whole theory behind the PPP, again, even though we have certain dates that extend all the way out to the end of the year and things like that, and what is not forgiven will continue to be paid, even though there's a kind of a grace period on that. I think they're looking just at that 8-week window, which without having, the calendar right in front of me, I'm just going to say is based on June 30th, since that seems to be the hard cutoff date in terms of getting the forgiveness. This is an issue that I think Congress will come back and revisit if we don't start to show improvement and kind of, getting back a little bit financially on our feet economically. But as of now, right now, it's not clear to me. Right now, everything is focused on that 8 weeks. So what happens with your employees after that 8 weeks? There's no way of knowing whether they're going to extend and kind of reinstitute another 8-week grace period. Just don't know. There's going to be more bills coming. There's going to be a COVID-4. There may be a COVID-5, and this is something that may, for better or worse, have to be addressed in that.
Craig, I'm going to circle back to the 1099 question. It sounds like, I think we may have answered that for folks who themselves are independent contractors, but we've got a couple of representatives from companies who employ independent contractors and are asking if they have the ability, if they would want to, include those 1099 employees in their own payroll estimates.
Yeah. I know that part-time workers can be included in this. As far as I'm a little reluctant to answer that straight up since I haven't had a chance to go back and look at the fine print. But I'm inclined to say yes, to the extent that they want to keep people on the payroll, whether full-time employees or part-time, and presumably that would also extend to those that are 1099 employees. But I'm sorry, I'm going to have to qualify that and say, you know, we're going to have to go back and take a look at the fine print on that.
Okay. And probably the same for temps who are employed via an agency, right? That's probably in that same, you know, may or may not be included in there.
Yeah, okay. That's correct, because my concern here is, and one of the things here is that you know, when you go to bring, now again, by the way, when you go to bring your information from February 15th through June 30th of last year, if it includes 1099 people, I mean, clearly you're not trying to scam the system by suddenly claiming that you have a whole bunch more independent contractor people that you're paying than you don't. So given the baseline of last year for this, I'm kind of erring towards the fact that probably that could be included in, but I'm going to have to go take a look at the fine print. I'm kind of looking through some material right now, but I can't say with 100% certainty.
Greg, if I'll jump in here real quick, I think since the bill itself really defined what can be included in payroll costs, for one section was employers, the second section was for sole proprietors, independent contractors, and self-employed. I don't believe that independent contractors would be able to be considered in that first section of the employers. I think that they're handled in the bill as a separate entity, and I think that's the way that they would have to come across in application for this.
Thank you, Mark. I agree with you on that, and I'm looking through materials right now just to see, and I mean, the fact you've got it right, that this legislation has gone to such great pains to include independent contractors as being eligible themselves for, you know, payroll protection program loans. I concur with your take on it.
Okay. I think we're almost at time. I'm going to do two more questions here. One is related to the notice that you mentioned earlier, Craig, that needs to be posted at workplaces. Where do folks get a hold of that?
I would go to the Department of Labor website. They just posted an update yesterday. I haven't seen the typical poster yet that you normally would post. They were supposed to have put it out about a week ago, but I looked a little bit yesterday evening and I was unable to find it, but it probably exists out there. But I would watch the Department of Labor website for that.
Okay, and then last question, I'm actually going to combine two questions here related to, you know, as folks are trying to estimate their payroll amounts. One question related to people that they were about to hire, positions they were about to fill before this happened, and then they put on hold. Can they build those into their estimate for the payroll protection plan? And for folks who have already cut some salaries, do they still qualify, and would they qualify at the 100% salary or at the new 80%?
Well, again, the loan size depends on the business situation. The maximum loan is up to $10 million. If you were in business from February 15th, 2019 through June 30th, 2019. And it's based on the number of employees that you have, but also in terms of what you can use it for. If you want to hire, they want you to hire people back. So for this year, if you were about ready to hire someone, or if you had to lay someone off, go ahead, and in terms of counting them, in terms of getting the forgiveness, the loan forgiveness, go ahead and hire them back. That's the whole gist of this paycheck protection program and the payroll protection loans that are being given out. I've read that in several analyses as well as the legislation. Yes, go ahead and hire them back, bring them back.
And it's based on the average monthly payroll size, right? So the qualifications for the loan is based on the 2019 numbers during that period. The 2020 numbers, I mean, you basically, to include it in the numbers, you have to hire them. So whether you let one go and hired someone else, it's still the average monthly salary obligations that's used for this year to calculate the forgiveness amount for last year to calculate the size of the original loan.
Correct.
All right. Well, I mean, we've got more than 100 questions. We could spend a whole nother webinar just doing Q&A. But, you know, I think we should go ahead and wrap up. We are at time. I do want to make one comment on here. I saw a note saying, you know, we've spent a lot of time today on the SBA opportunities and, you know, what's going on with businesses under 500 folks. I think that it would probably be, I think we'll need to have a discussion, but, you know, we may decide that we'll put on another one of these when we have more information about the benefits available to companies at 500 employees and over, so that we're getting that information into the marketplace as well.
Absolutely. And that may or may not be a webinar, but we certainly could work with Craig and his team to put together potentially a special report on that to try to be able to bring those details to everyone. So with that, I think we'd like to try to close this up for the day, but I want to thank both Craig and Liana for stepping in and helping with all this and doing a great job with the parts of their presentation. I want to thank everyone for joining us. We do want to mention that there is a final part of this 3-webinar series that's going to happen on Friday, April 3rd, beginning at 11:30 a.m. Central Time, 12:30 p.m. Eastern Time, by Joe Derechowski of the MPD Group, is going to talk about consumer behavior and what has happened since this all started, and looking at POS and looking at some of their reporting to see what consumer behavior changes have happened and how do we look forward to that for opportunities, and also how do we continue to see what's going to happen in the market from here forward. But that will be a great one, and we certainly would love for you to register and join us for that one also. But thank you all again. Craig, Liana, thank you. Hope you all have a great day.